Welcome to the Recon Trader. In today's video, I will share with you my tactical strategy for buying pullbacks on Bitcoin and Ethereum. And so with that being said, let's get right to it. Now, as we look at the chart, I have it nice and clean. I don't have any indicators or anything on the chart. And from that price action, there is a story being told. If we just take a quick look, we can see kind of a double top around Bitcoin's all-time high. We're looking at the Bitcoin USD 1 hour chart on Coinbase. And we can see where we ran up to an all-time high, got rejected, ran back up a little higher, and got rejected again. And then the price action makes a weak attempt at running back up. And we get a doji candle right here. And that doji candle is indecision, and what ends up happening, it starts to sell off. Now, we see quite a lot of blood on the screen, and how do you avoid getting cut? Because remember, when you try to catch a falling knife, you're going to get cut, and you want to avoid getting cut by that falling knife. And so I have a tactical strategy that works for me, and I have a couple different weapons that I use for that particular strategy. The first weapon is going to be RSI. If I turn on the RSI on my chart, now I use the 9 period, and I'm looking at oversold of 20. That's this white line across the bottom. The first thing I have to see on a sell-off like this is it has to become oversold. Like, for instance, when we come over to this part of the chart, we get rejected, but we don't hit oversold territory whatsoever. So it's not surprising that this bounces and kind of consolidates and then eventually does roll over after achieving all-time highs. And then once we achieve the oversold level, I need more than just, all right, we're oversold, I'm going to jump in, because it can, again, just roll back over on you. And I see a lot of traders go, well, we hit oversold, and now we got a green candle, I'm getting in. Well, if you look, the very next candle rolls back right over on you, and that wick comes down into this region. Odds are you're getting stopped out. If you're practicing good risk management, you're going to get stopped out more than likely at the bottom of these two candles if you entered here. And you're going to get stopped out. And you're going to get super frustrated going, I had the oversold, and I had it moving back in a positive direction out of the oversold range. There's actually more to my tactical strategy. And so what my tactical strategy requires is not just the oversold, not some little bounce. I need confirmation that the price action is finished selling off. And that's what happens on this candle. And so this big candle here gives me that confirmation. It's kind of known as an engulfing candle. And what I'm looking at is the body of the candles. I don't care so much for the wicks when I'm looking for what I'm looking for. Now, everybody's strategy is a little different, but for what I am looking for is this engulfing candle. Obviously, we don't get it here because that would have had to close up here. And if it did, that'd be a very bullish candle, but it didn't. Now, with this candle, we engulf the entire body of the previous candle and actually get a really nice size bar printed. And when it closes, it has to close before I enter because it needs to confirm this is what the price action is doing. Once it closes, that would be my entry. All right, so I would enter on this close. One other item I could add to the chart would be an EMA, and it's going to be a very aggressive EMA. It is a 4-period EMA. Super aggressive only because I have my RSI level, I have my engulfing candle, and I need this to break above that EMA price. Now, with my experience, and in some situations, I may not go with the EMA. I may just go off of the oversold and the engulfing candle, especially a candle that looks this good. But you can see on the 4-period EMA, we actually break above it and close above it. That tells me this price action's ready to move up. And what does it do? The very next candle, it moves up. And so those are some of the weapons I would use to buy a pullback. And before I ever engage a target, I have to know where my stop loss is going to be placed and what my profit targets are going to be. And typically I'm looking for 3 targets as I generally scale out of a position. And so on this particular situation, where would I put my stop loss? I would drop my stop loss in at the bottom of these 2 candles, or I might look back to this candle. You can see that wick is also pretty much in line with the bottom of these 2 candles. So I would drop my stop loss at the bottom of those 2 candles. If for some reason this price action after this big run up rolls over, I'll get stopped out. Now, what are my profit targets? Well, I know I've entered at the close of this candle here. And so now I need to look for some profit targets, preferably 3. Now, one of the spots I would see is obviously our higher highs. That would end up being somewhere around 6%, just shy of 6%. I certainly would want to take some profits before that level. So what do? I need to check my 6 or look back, because the reality is price action is not as chaotic as new traders think. It is actually quite controlled. Most of your elite traders are looking at certain levels. And so if I look a little further back than these highs, I see resistance right here. And remember, this part of the chart does not exist, so we're not going to go that way. We're looking back. I see rejection here, and I'm going to actually look back a little further. And what do I see again? Almost a double top right here. And so for me, and while we're looking back, checking our 6, where do I have my stop loss? I have it pretty much at the bottom of this wick. Now I'm feeling even more comfortable with my stop loss once I enter. And then off of this double top area here, that's going to be my first exit point. And so we'll throw that in there. And let's see what kind of profit that's going to be. Eyeballing it, I'm guessing it's about 2%. It's 1.7%. That's my early take profit. So I'm taking profit real early, get some profit under my belt, and once we hit that, now I'm ready to look at my second level. And that second level is going to be the area we discussed before. However, I'm not going to go for the all-time highs. I'm going to go for where this actually sold off from. And where it sold off from, if we look across, looking back, checking our 6, we can see some resistance in this area. And now, from that level, we're looking at almost a 5% profit on the move if we can get it to go there. So now I have my stop loss, my entry, first level of profit, second level of profit. Where am I going to go for my third level of profit? Well, the reality is, once we hit the second target for profit, I will move my stop loss up to my first target for profit. That way, if this rolls over on me, no matter what, the trade's profitable. And so if I move my stop loss up to my first target, now where am I going to put my third take profit? More than likely, right under the all-time high. So our all-time high capped out at 24,300. So I'm probably going to go somewhere just south of that, probably right around the 2450 range, and see if we can't get into that range. And that way on my final third, I'm looking at a profit of just around 6%. And so what that would basically look like is I would enter and engage the target at this level here, and I would say buy $900 worth of Bitcoin. And then once I hit this area here, I would sell $300 of Bitcoin. Same thing at this level, I'd sell another 300. I'd let the final 300 ride up into this range and dump that last 300 once we hit that target. Now, because we have the advantage of seeing the future, if I engage my target where I wanted to, we would have hit our profit probably on this candle, but worst case scenario, we never get stopped out. We get close, but we don't get stopped out. And then it runs back up, and I definitely would be in the profit here. And now we're starting to look at perhaps a push back up towards this level here. And so with that being said, let's jump to a chart for Ethereum and look at a very similar situation. So you'll see here in the middle of the screen, we get Ethereum to reach up into the $615 range, only to roll over. It went much slower than Bitcoin did, which could actually be more frustrating because you could see it start to roll over. And if you look back, check your 6, you're thinking, all right, this level is going to be support. You enter only to have it roll over on you again. And so to avoid this happening to you, what you can do is wait till we hit the oversold region like we do here. I'm going to turn off the VWAP, and I'm going to change this. And I'm going to change the EMA to 4 for this particular setup. And you can see my RSI is 9 as it was previously on the Bitcoin chart. Now, so we see it come down and finally hit the oversold 20 region, which is what we were looking for. And now I need confirmation this is going to move back up. Well, what do we get? We get another one of these engulfing candles, where it engulfs the body of the previous candle. And in reality, the oversold and this engulfing body, that's enough justification to pull the trigger and engage this target. However, when we incorporate the EMA, we see we close above it. That, to me, 3 points of confirmation. Let's pull the trigger and engage. And so if we were to engage here, remember, before we pull that trigger, I need to know where I'm going to place my stop loss and where my profit targets are going to be. And what do we need to do? We need to look back. 6 days back, we see where this move starts to take off and get a little support off of some rejection. I know that's really small to see. You probably can hardly see it. But the reality is that gives me enough information now to zoom back in and set up my stop loss at the bottom of this candle. And if you watch some of my other videos, you'll see the software that I use to trade. I can do my stop losses and my take profit targets all at the same time as placing my buy order. So now we have the stop loss set up. Where do I want to take profit? Again, we look back and check our 6. What do we have? We see some resistance after this reached a high up here. We see it sell off and set a lower high, and then it totally sells off. And remember, we don't have the advantage of this info. So I want to look back a little further. And what do we start to see from here to here? We see another double top. We see even a higher high, and that's after a big sell-off. And so that's going to be my first target for profit, is to see if we can't reach back into this area and test this resistance. And reality is I'm going to lower it down just a touch to come in line with these candles that are just below this area of possible resistance. And that's going to be my first target for profit. Now let's see what kind of profit that would be. Well, that's going to be just shy of 3% profit. I'd be happy with that move. And again, we don't have the benefit of what actually happens. My entry, which would be at the close of this green candle here, this big bar that engulfs this last red bar. So I'm going to enter here. Here to here is about 3%. Now that's a pretty lofty move. You could actually look back and go, you know what? It kind of formed some support here before it sold off. I might try to sell off into here. But I am fairly comfortable looking at these, looking back at this level and this level as being my first target. Now, my second target is going to end up being this double top, essentially. And so I drop that target in there. And so my final third target, I'm actually going to use the Fibonacci retracement tool, since I really don't have a level in here. And I'm going to use the tool the way I use it. I don't want to hear about that's not the right way to use it. I've been trading for years. This is how I use it, and it's been profitable. So if I'm not using it the right way, then I don't know what to tell you. It works for me. And so I'm going to take that Fibonacci retracement tool, and I'm going to swing from the low up to the high. And when I do that, what do I actually see? the 50% mark is right on my second take profit line. That's not just coincidental. I didn't make that up. I went from the low to the high, and that 50% mark is right on my second line. So I'm going to take my third level of profit at the 382, and what the Fibonacci tool for me does is it gives me some levels to look at that my eye might not be catching. And so in this case, I'm going to drop my third target at the 382 level, and if I do that, I see that level comes in right where this actually for a moment saw support. Now it ends up rolling over anyway, but that 382 level also corresponds to this support. And so I'm looking to achieve this level for my third target. And remember, once I hit this second target, I'm moving my stop loss from down here up to my first target. So no matter what, this trade will be profitable. And again, I was ignoring, when I was looking back, I was ignoring all this future information. And if we look forward, what actually happens? We achieve my first level. We have a slight pullback. I achieve my second level. And I also shortly thereafter achieved the third level, which was the 382 on the Fibonacci. And what happens? That 382, this previous support, has now turned into support. Again, I can't stress enough, price action is not pure chaos. There is a rhythm to it. Once you figure that rhythm out, you become an elite trader. And in reality, it's not that difficult to figure out if you just start looking at charts and start drawing some lines. They can't be arbitrary lines. There's got to be a reason for them, like the 382 on the Fibonacci. Did I use the tool the wrong way? Perhaps. I used it my way. Do I use this EMA of 4 the wrong way, where guys set it at 10 or 12 or whatever number? Perhaps, but they're my weapons. I choose how I use my weapons. And with that all being said, the purpose of this video really was to just show you how to buy pullbacks, whether it was the pullback here on Ethereum and take your profits, or on this big pullback on Bitcoin. There's going to be a lot of opportunities out there to buy pullbacks, and they can be extremely profitable. I often call them my counterattack trades. And so with all that, I'm going to wrap this up. If you like this video, do me a favor, spike a like. If you'd like to see more of these type of videos where I talk about my tactical strategies for trading cryptocurrencies, do me a favor, leave your comments or questions down in the comment section down below. And before you take off, be sure to shoot that subscribe button. That will ensure you don't miss any future videos. And remember, never send your money into battle without first doing your recon. See you in the next video.